Good evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Thursday. And here we are at the 9th of March, 2023, 6:07 p.m. Central Time, and you're going to try to make sense of everything and don't. You're in that emotional area of the market where the stock market comes unglued, the gold gets a bid because the world's ending, the dollar takes a nosedive today and helps the gold rally a little bit, but it's really just about traders evening up, the scenarios, it's going to do this, it's going to do that, you don't know. I do cover tonight in detail to a degree here a New York Fed research report that came out today where they name a model, it's all in my report, and they say that their numbers that came out in January were not accurate. Inflation is much stickier than that report that came out. They have adjusted their models. Is that a harbinger for what's going to be tomorrow? And Monday. Now, why? The two are very important. You get the jobs to show us what's the labor demand through all this, but then you get the CPI number to show you how much inflation is there. Is it sticky? Isn't it sticky? Where's it going from? That's going to be the key. After that, it's normal trading again, whatever the new norm is and whatever, maybe it's the old norm. But I don't want to be that guy jumping like this, jumping like that. Oh, the chart action's going to do this. The chart action will be just fine. It'll be waiting for me after 7:30. That's my opinion on all this. So when we look at gold, I have been making an argument that the market's fighting a battle at the 18-day average, the 18-week moving average of closes. That number is 1833.30. You're at 1836.20. Yesterday you were under the number. Today you're right there. Remember, this is a close-only chart. So that's why it doesn't show the swings on either side. And that's what I want it to be, a close-only, to give me an idea where the bias is. Right now it's up. When you take a look at an April bar chart, and we're going to switch over to June very shortly. I looked at it today, but we'll stay with April right now. The market has done what I thought. At that 1810, 1814 area, right in that zone, it's trying to find its support. You'll see that in a second here. You see it here from the 1813.40, a little lower right through here. And when you add to the chart the 200-day average, this gray line, and then the green, you see the battleground. Where's the resistance? On the rallies, it's been the 18-day average of closes. Is this a tradable pattern? Let me be very clear. No. Trade all said and done. Then you put the Bollinger Bands on. You're coming into support of the Bollinger Band and last. You've been oversold and you're lifting up. Could you get an immediate buy signal out of this market? I don't see how. You have a lower low. If you took out this peak here, you'd have a higher high into the band. Can you get a sell signal? Yeah, if you closed under all this, under 1806.80, in theory, you're underneath everything. Do I like selling under, and I'm talking my approach to markets, do I like selling and telling my clients to go short under a first challenge of a 100-day and a 200-day average together? No, I don't. Generally, if the market keeps coming there, it'll test it over and over. There's no rush. When I look at the gold-silver ratio, silver's just in so much trouble. You're now to 91.7. You know, are you going back to the 97? That was about the highest it'd been. So, by the way, let me show you something. Once you got over this bias line, remember my teachings to you? I use the 18-day average and say when the market's over it, bias is bullish, under it, bias is bearish. It is a filter on my swing line. It helps me tremendously to say, no, everything's in sync, it's a go signal. Well, any buy signals you've had of the gold over silver have certainly panned out, and the market hasn't gotten under that number. When we come to the May silver, since it got under that line, the 18-day average, you tell me what it's done. Just keeps leaking away. It got embedded, it lost it, it came down. And when it lost it, it did go to the 200-day average, and then it collapsed again. So this market has been consistently bearish. That's the way to say it. Copper's not getting a lift out of anything so far that's been said at the Party Congress in China. You know, everybody was hoping that the real estate markets would get help and so on. If you get my full research, and, you know, by the way, you want to get the Linn research, my research for everything that's going to happen tomorrow. We'll be talking the impact of the report, the jobs report, and on Monday, the CPI, on commodity markets, the metal markets, the currencies. We're going to be all over this. And you can get it for free by moving your cursor up here. And at the end of this, I'll talk about it when I show the ad. But that's how you get it. Go up there, go into the free offer section and sign up. You want to see what we write. Be a lot of graphs and everything to go with it. Copper's under that pressure. It might drift back here. One of the things I said is you're basically in sideways action, which means false moves to the downside, false to the upside, and you generally get killed in this pattern. In the platinum, it's the same thing. You tell me you didn't just go sideways and now you're just drifting around. You don't trade those patterns. You walk away from them. You don't have to trade every minute of the day, every day either. You wait for the market to come to you. This has been more of a bearish pattern. Notice you're not as narrow. You're not going sideways on these bands. What has this market done? It has stayed under since the beginning of the year, the 18-day average, and kept you into the bearish bias, giving you another filter on trade ideas you might have. Now, in the dollar, you have an overbought market. Are we going to embed? Let's take a look. Both numbers were not over 80. I don't have to go any further. You're not embedded. You have an overbought market that has rallied into the combination of resistance of the Bollinger Band and the 100-day average. If it breaks here, supports 104.49. If it rallies, the first challenge of the 106.06 area, the 200-day average, might be a stopping point for the market. I don't know what that report's going to do. And frankly, I'm scared to death of it. So I don't tell my clients to go in. We sit back. When I say we, my subscribers and I, at least I advise them to sit back. We pick up the pieces after everybody gets hurt. It's the smartest move I know how to do. So as I said, one of the things that we do at Linn is we write. We have a great staff. And I mean, we will analyze the report. We will tell you what impact we think it'll have on grains, the meats, the soft markets, the interest rate markets. We'll be talking all the technical points in the stock indices, of course. So it's a little bit of everything. The energies, you know they're going to be impacted. A stronger, weaker dollar will have an impact on all this. So if you'd like to get it, it's simple. Just move your cursor to the very top up here. You will see an icon appear. Give it a click. Fill out the form. We'll get you on this. We want to get it on for you right away so you get to see the reaction to the reports and so on. We'll probably put out tomorrow 20 different reports, so you'll get quite a few of them. All right. With that, I'm Ira Epstein. You can also give us a call. I will see you all tomorrow morning. I promise you it's going to be wild. You'll want to catch me at that 8:30 report when I put it out because there'll be action galore. I'll see you in the morning. Take care.